Hello, today we are solving Jan 2025 paper, Unit 2, question number 3. Sunrise PLC is to develop and produce a new electric scooter, Light Beam. Sunrise PLC hopes to start selling Light Beam electric scooters next year. The following is the information available concerning the expected costs and capital required. Okay. So prepare a capital budget to finance the production of Light Beam electric scooters. So you have to prepare a capital budget, okay, capital budget, and so we can see that they need these are the costs involved, and for developing and producing a new electric scooter. So let's see what are the cost breakdown. We can see that they need the 24 million for research and development, 21 million for the purchase of the land for the factory, then the building of the new factory 36 million. They need machinery and equipment for the new factory of about 26 million, and material and the parts are about 42 million, and recruiting and staff costs amounts to 19 million, and marketing costs are about 32 million. The capital for the new electric scooter, so these are the costs involved. Okay, so now let's first calculate what is the total amount of money they need to raise, and how are they going to raise this money through the capital budget. Okay, it's an estimation that they have prepared, that the cost is going to be this much, and they are going to raise this total cost through different ways. One is they are going to issue shares, then the other one is they are going to issue through three other sources like debenture, bank loan, and redeemable preference shares. And also they are going to use a government grant, and the remainder is going to be funded using retained profit. So these are the different ways they are going to fund their production of this new electric scooter. So let's calculate what is the total cost involved. Okay, the total cost is going to be equal to this entire thing, 24. Okay, 24 plus 21 plus 36 plus 36. 1 second. Okay, so that is plus 36. That's the total cost for new scooter. Okay, for production of new scooter, for production of a new scooter. Okay, so that is equal to 24 plus 21 plus 36 plus 26 plus 42 plus 19 plus 32. So that is equal to 200 million. Okay, that's equal to 200 million. Why are we calculating the total cost for the capital budget? Because they are saying how they are going to raise the portions that are required by the total amount that is required through different ways. Okay, for example, here they are saying they are going to first a share issue to ordinary shareholders for 25% of the total capital required. So they are not going to rise entirely through one method, so they are going to use different methods, and this is the capital budget of how the money is going to come into the business for producing the new scooters. So first one is they are going to have 25%. Okay, 25% of the total is going to be issued through the shares. So 25% of 200 million. That million, I'm not going to write the zeros. Okay, here just for 200 I'm going to add right, and finally it will be in terms of million only. Okay, so whatever you are going to get, okay, these are all going to be in millions. Okay, so 25% of 200 million is going to be equal to 50. Okay, this 50 million, okay, is going to be raised through issue of shares. Okay, this is 25%, which is like this. I'm going to issue raise through the issue of shareholders. Then the second one, 98 million. Okay, 98 million in total is going to be raised through three sources. Okay, one is 9% debenture. So 9% debenture and bank loan and irredeemable preference shares. So 98 million is going to be raised through these methods. So let's calculate. So the first one is 9% using debenture out of 98 million. Okay, and they have said that this is going to be raised in 4:2:1. Okay, so they are going to be raised in some ratio which is 4:2:1. So 4 out of the total, 4 plus 2 6, 6 plus 1 7. So 4 out of 7th portion, okay, of 98 million is going to be raised through the preference, through the debenture. Okay, through the debenture. So the 4 okay into 98 divided by, okay, 7. So that is equal to 56 million. Okay, then you have the second 2/7 is going to be raised through bank loan. Okay, out of the total 98 million, 4 parts, okay, 4 portions I'm going to raise through the issue of debenture. Then I'm going to issue 2/7 is going to be issued through the through the use of bank loan. That is equal to 28 million. So 28 million. And then you have redeemable shares. Okay, one part is going to be raised through the redeemable shares. So let's rise one part. Okay, 1/7 of 98 million is going to be raised through redeemable shares. So 1/7 of 98 is going to be 14 million. So 14 million. And then you have the government grant. So it says a government grant to cover 50% of the cost of the building of the new factory. So this building of the new factory is around 36 million. So 50% of 36 million is going to be covered by government grant. So 50% is going to be covered with government grant. Okay, cost is going to be covered by government grant. So 50% of 36 is going to be equal to 18 million. Okay, that is 18 million. And then funded from the retained profit. Okay, then the remaining is going to be, so let's add up these first. Okay, the remaining is going to be funded using the retained profit. So that amount we have to calculate. So let's first add up these. So this value is going to be equal to 50. Okay, 50 plus 50 plus 56 plus 28 plus 14 plus 18. So that is equal to 166 million. Okay, so 166 million. Okay, 166 million is going to be raised through all of this. The remaining, so the remaining amount we have to find, that is 200 minus 166. So that is equal to 34. So the remaining 34 is going to be, okay, funded through the retained profit. Okay, so this is the split up of the budget. Okay, so you will write it like this and you will put millions here because it is all in millions. So the funded from the retained profit. So you can write here. Okay, all this added together will give you 166. Here you should not put on this side. This is a working area where you can put. Okay, then next one is prepare the production budget for each of the 6 months of production of light beam electric scooters. So let's prepare the production budget. So for this we can see that the electric scooters are built to meet the sales order. If a sales order cannot be met in the same month, then it says the factory is going to produce the electric scooter in the next month as soon as possible. First, they will finish whatever the orders they have been they are going to do in the first month, and then if they are unable to complete this order, they will immediately first complete in the second month and then proceed to produce for the second month. Okay, the capacity of the factory is 12,400 electric scooters a month. The sales of the light beam electric scooters in the first 6 months are expected as follows. So here the sales demand is like this. Okay, they have projected sales demand, okay, of around, they believe that this is what they will be able to sell. Okay, so accordingly you have to plan your production to meet this sales demand. If they say I want to, there could be 16,000, you should be able to produce 16,000 to make the sales happen. So you will do the production budget based on the sales demand, okay, which is a projected sales demand or an estimated sales demands for the month. Now in the first month we can see it is 16,000 that needs to be sold. Okay, so for preparing the production budget you can use, okay, any method. I am going to use like this. Okay, it is all about, you have to understand, okay, the total capacity is 12,400. Beyond this they can't produce. Okay, so if this like for example in the first month, let's see, for the first month we can see that the sales demand is 16,000. Okay, but they will be able to produce only 12,000. That's the maximum, you can't exceed the maximum. So the production possible is 12,400, right? So now what is the difference, okay, that will get so here we can see that they would have not completed this demand, so they will complete first in the next month. Okay, and then proceed to meet the demand for the month 2 of about 13,000. So let's see what was not completed in the month 1, it will be carried forward to the month 2. So 16,000, okay, 16,000 minus 12,400, that is equal to 3,600. Okay, 3,600. I'm taking a negative sign for the sales because this is what is going to be produced and this is what is going to be sold. So okay, so this is positive 12,400, and out of this 16,000 had to be sold, but it can't meet. So for the next month they have to first produce 3,600 extra. Okay, so 16,000 minus 12,400, 3,600 will be produced. And now we can see for the second month there was a sales demand of 13,000 also, right? So there was a sales demand of 30,000. So the total production that needs to be happened for this month, if we can see, is 13,000 plus 3,600. Okay, 3,600. So that is equal to 13,000 plus 3,600. So that is equal to 16,600. So this month they have to meet 16,600. So but we can see that, okay, but we can see that the production possible is only 12,400. So I am going to again first, okay, write this. Okay, 12,400, they would have met 3,600, and up to a certain point they would have met in 13,000. So the remaining is going to be carried forward for the next month. So 16,600 minus the 12,400 minus 16,000, okay, minus 12,400. Okay, so 12,400 minus 16,600, that is equal to minus 4,200. So for the next month the extra needed to be produced is 4,200. And then for this month also there was a sale demand, okay, that is 8,900. Total needed is 13,100, but they are able to produce only 12,400. So that is equal to 700 extra needs to be produced in the next month as well. And then you have the For the month 4, okay, they need to produce 7,500. Now let's see if it is within the production budget. 7,500 plus 700. All they need to produce is only 8,200. So this is within the budget capacity of 12,400. So they will just exactly produce in this month 8,200. Then for this month there is no extra, so we will just have to meet the sales of the month. 7,300. 7,200 has to be met in the month 5. So 7,200. And this is also within the production budget, so they will have to produce only 7,200. And then for the month 6, we can see they have to produce 6,600. 6,600. And here also they will exactly produce 6,600 only, because it is within the production capacity. So only for the next month they will exceed. Okay, so let's go and write these values for the first month, for the second month, okay, for the third month it's the same, and for the next set of months we can see it is 8,200, 7,200 and 6,600. And then you have the part C question. Prepare an extract from the cash budget to show the amount of cash, including the amount for each month that will be received from customers for each of the first 3 months of sales of light beam electric scooters. For the part C, the information is given here. Light beam electric scooter will sell for 1,275 pounds to the customers, and the customers will choose to pay using one of the following 3 options. There are 3 options: option 1, option 2 and option 3. For the first option, we can see that 40% of the customers are expected to pay for their new electric scooter with the cash on the day of the sale. For the second option, they are giving is 15% of the customers are expected to buy the new scooter on the following terms: nothing to pay for 12 months, with the payment being made full in 12 months after the date of sale. And in option 3, the remaining customers are expected to buy the new scooter on the following terms: 20% deposit on the day of the sale and 18 months payments of 75 pounds starting with 1 month after the sale. So all of this are given. Then you are supposed to prepare a cash budget, okay, to show what is the amount of cash, including the total for each month that will be received from customers. So cash flow inflow into the business through the customers, okay, because they are going to pay in 3 different options. We are going to calculate and estimate which one is the best. Okay, for that purpose you are going to prepare the cash budget. Okay, so it's a cash inflow part, okay, we have to prepare. Okay, so option 1, so cash or the cost received. Okay, let's see, the cost or the cash received is quantity times the rate. Okay, so the quantity is 40% of the customers. Okay, in the month 1, okay, how many is the quantity? That is 40% of 16,000 sales. Okay, these are going to be the customers. The number of customers is 16,000. They are all going to pay upfront. Okay, 1,275. So at least 40% are going to end up paying in the first month. Okay, cash. So you will get 8,160,000. So in the first month, the business is going to receive 8,160,000. And then it says that in the month 2, 40% we have to calculate. They are going to pay off full 1275. So 40 percentage, okay, 40 percentage of the month 2 sales is 13,000. Out of the 13,000 customers, at least 40% will be able to pay full in cash. Okay, so 1275, that is equal to 6,630. Okay, 6,630,000. So let's write here, this much cash is going to come to the business. And then for the month 3, okay, month 3, it's 40 percentage of 8,900 times 1275, that is equal to 4,539,000. Okay, 4,539,000. So that is equal to 4,539,000. So this much cash they are going to get into the business. And then for the option to 15% percentage of the customers are expected to buy the new electric scooter on the following terms: nothing to pay for 12 months, with the payment being made in full, okay, 12 months after the date of the sale. 15 percentage of customers are going to do like this, it says. So let's see what is the calculation. So in the first, okay, nothing to pay for 12 months. So in the first 3 months also they need not pay anything, and after that they are going to pay, it says. Okay, so it will be 0, and then here also you will not pay for 12 months. So which means that all 3 months they are not, the business is not going to get that money, and the full payment, okay, is going to happen, like all 16,000 will end up paying fully. That's what they are saying. Then in option 3 they are saying the remaining customers are expected to buy the new electric scooter on the following terms: 20% deposit on the day of the sale, and then 18 monthly payments of 75 pounds starting 1 month after the sale. Okay, let's calculate for option 3. Okay, option 3, it states that for the month 1, okay, for the month 1 it says that 20 percentage of the deposit, okay, 20 percentage of the sale, okay, the deposit on the day of the sale. So 20 percentage of 1275, this amount will be paid as deposit. Okay, and will be paid as deposit, and the remaining customers, so the remaining we have to calculate. So what is the remaining amount, okay, of the customers who are going to, not everybody, okay, not all 16,000 remaining. So 40 plus 15, okay, is 55. So 100 minus 40, 40 minus 15, this is the amount of customers, and they are going to, okay, this is the amount of customers, okay, who are going to give a deposit in the month 1, okay, in the month 1. And then what they are going to do is in month 2 they will pay some amount. Okay, then the month 2, this people, okay, are going to pay 75 pounds in the month 2. So this set of customers are going to pay in the month 2, and in the month 3 also they will end up paying this much. Okay, okay, this is for the month, okay, for the 3 months. And then for the option 3, okay, month 1 sales we have to include. So let's calculate this value: 20 percentage of 1275 into, this is 45 into 16,000. So that value is going to be equal to 1836,000. Okay, 1836,000. And in the month 2 it is equal to 540,000. and in the third month they are going to pay 540,000. So this much they are going to pay for the 3 months. Okay, so it is 1836,000, and in the second month they will end up paying 540,000. Here also they will end up paying 540,000. Then for the month 2, okay, let's calculate for the month 2 what happens to the sales, okay, to the sales for the 3 months. So for the month 1, the thing is, okay, again we saw that 20 percentage of the deposit, okay, it's going to be paid. So that is 20 percentage of 1275, okay, 1275 into the remaining customers are 100 minus 40 minus 15, okay, and how many sales are happening, okay, the remaining percentage, okay, this is the percentage we are calculating. So this is percentage we have to put, okay, percentage is going to be equal to 13,000. So 13,000, so that is equal to 1491750, okay, 1491750. So 1491750, okay. This is happening in the month 2. So we'll start with this for the month 2. For the month 2, the sales is around this much, and this would have happened, okay, the cash would have come this much, and this is for the month 2, okay, and the remaining customers who are taking up this option in the option 3 in the month 3, they would end up paying only 75, okay, 75 pounds, okay, 75 pounds for the thing, and no deposit has already been paid, so they will end up paying this much, okay, 75 deposit, 75 pounds deposit, and the value is going to be equal to 438,750, okay, it is going to be equal to 438,750. So 438,750. Then for the, if somebody takes, okay, this option 3 in the third month, let's see how they are going to pay, okay. For somebody takes an option 3 in the month 3, okay, so in the month 3 somebody takes, they will have to pay 20 percentage, okay, 20 percentage as deposit for 1275, okay, 20 percentage they will have to pay as a deposit. And how many people are going to pay this? This is the same, for 100 minus for this percentage, okay, this percentage of people, okay, this percentage of people on the total sales, okay, 8,900, at least 45 percentage of 8,900 people will take up this option, it is believed, okay. If they do that, then it is equal to 1021 okay, 275. So 1021,275. So now let's write it here. So 1021,275. So this is the thing, okay. Then now let's add up, okay, if what are the options, okay, based on the options they have given, this is the estimated cash that's going to come into the business. So 40 percentage are going to opt for the option 1, and the cash is going to inflow like this. For option 2 it is going to be like this. For option 3 it is like this. Okay, so the total is going to be 996,000. Okay, then for the second month, let's add up all these values. Okay, for the second month, the cash inflow into the business will be equal to 8,661,750. Okay, 750. Then you have for the month 3, let's add up all these 4 values. So it is going to be equal to 6,539,025. Okay, so this is a amount. Okay, this is the amount they are going to get. Okay, this is the amount the people are going to pay, and the business is going to receive this much amount in the amount of money through the cash budget.